Today, we're looking at one of the most extraordinary geopolitical developments in years, the arrest of Venezuelan President Nicolás Maduro and the direct involvement of the United States. Venezuela holds the world's largest proven oil reserves, yet produces only a fraction of its potential, making this a pivotal moment for energy markets. I'm Johanna Bota, and joining me today to unpack the initial price reaction, the implications for oil fundamentals, and what could come next is Alex Hodes, Director of Market Strategy at StoneX. Welcome back, Alex, and Happy New Year.
Happy New Year, and thank you for having me on.
Of course. Let's start with the big headline, because we can't get away from it. Maduro's arrest was a major geopolitical moment, yet oil prices barely moved. Why was the market's reaction so muted?
Yeah, so I think there's a few factors here. So although Venezuela has some of the largest proven oil reserves in the world, they have really taken a step back after sanctions and have not been as of a major player in the market as they had in the past. The initial reaction was that perhaps some crude oil production or exports would be affected by the arrest. And in the interim, though, there's actually prices have kind of taken a step back. And that seemed kind of counterintuitive to kind of what the initial reaction was. So prices initially jumped up and then kind of retraced back and are now almost steady with January 3rd when the action occurred.
Okay, so then the real question is, what does Maduro's removal mean for Venezuela's production outlook?
So I think from a short-term perspective, it's really what had been happening prior to this. The U.S. had an oil embargo essentially on the country, which had eliminated loadings. They had dropped off about 300,000 barrels per day from the previous month as of December. And so with the new kind of this current status quo, we're seeing this embargo kind of lifted. So there's a brief increase in crude oil exports, although the production on the ground is basically steady. So there's been all this talk about how oil production is going to increase, but that's kind of a longer term perspective.
Okay, so then with all of that in mind, what you just said, how might U.S. involvement change how Venezuelan oil moves onto the market now?
So just this morning, we heard a headline from the White House that was essentially stating that the U.S. would basically, they are going to kind of be in charge of how the oil is kind of transitioned and shipped, and the need for the U.S. to take over the oil industry to ensure a peaceful transition. And so that's still kind of up for discussion of how that might actually affect things. But what we could see is, because China was really a big purchaser of Venezuelan crude oil, those flows could potentially shift towards the U.S. Gulf Coast. However, there are some kind of roadblocks here. There are not a lot of refineries that have been taking this Venezuelan crude in the past. So not a lot of them are extremely equipped to take this very heavy, very sulfuric crude oil, and only a certain amount of those refineries are kind of equipped for that. And whether they will actually want to take that is kind of the question right now. But you could see a diversion of flows from China towards the U.S. Gulf Coast, but right now we haven't seen that change when we're looking at kind of ship loading data.
So you just mentioned China. Has this event increased geopolitical risk in oil markets then?
I think from the perspective of the hostilities between the U.S. and perhaps Russia and China, who have been very supportive over the Maduro regime prior to this recent turn of events, I think that could escalate things. On the oil front specifically, there's not a piece of oil supply that's directly in kind of harm's way or at risk because of this, but I think it does just elevate the amount of geopolitical risk of whether these two countries, China and the U.S., or the U.S. and Russia, that they will kind of continue to butt heads, especially, and this just provides another topic for them to butt heads over.
Yes, there are many already. So looking ahead then, what are the main scenarios that you see for the oil market?
So I think temporarily we're going to see a tick up in oil exports from Venezuela. 200 to 300,000 barrels per day could be kind of the initial response. And I think that on a broader perspective, the market is already kind of overwhelmed with supply. So this could be a bearish kind of headline in the interim. Obviously, there's hopes that oil production will increase substantially, but that's going to take years and billions of dollars of investment that, frankly, some of the oil majors might be hesitant to kind of throw in their hat into that because in the past, several companies, including ConocoPhillips, ExxonMobil, have kind of been burned in the past by deals with Venezuela. They're still owed over $8 billion, ConocoPhillips is. So whether they're actually going to be incentivized to enter in there is one question. And then the second will be, how much time does that actually take to get oil production back up to levels we saw prior to sanctions? So as of December, we were seeing Venezuelan crude oil production at 900,000 barrels per day, which pales in comparison to what they were at in around 2015, where it was at 3 million barrels per day. So I don't believe we're going to get to those levels anytime soon. And I truly don't even think the headlines that the U.S. will, put investment in Venezuela is going to move the market too much. In the interim, we could see the U.S. kind of pull down on some of the oil storage to bring to market. There's a headline that about 30 million barrels could be withdrawn from oil inventories and sold. But how that rate in which those barrels are kind of drawn down is up for debate. And right now, with oil prices pretty attractive, very low, we're not really in a hurry to kind of get these barrels to market.
Alex, thank you so much. That was some really great insight. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.